Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'm going to interject my financial opinions as we go through it, and it's generally related to three different topics: wealth building, commodities, and or financial topics. Those are the big three. I think the biggest value is in commodities at this time. If you were to look at ratios, commodities versus stocks, commodities are undoubtedly the cheapest sector. Probably generational wealth can be created here if you get good buy points and just hold. That's the strategy that I've been deploying. It's worked so far, and I focus on those entry points. So let's dive in here. Let's take a look. Let's see what's going on at Finance if you want to follow me. And if you want to see how I'm playing the commodity bull market and you want to learn about investing, finding-value.com. We have a community there. I do midweek updates. I just released a midweek update. I also do question and answer sessions where you guys can ask me questions directly, and I do trainings at the beginning of those. It's pretty popular, and people are learning, I think, a lot on how to become a better investor. And I'm applying every single principle I know related to ratio investing, technical analysis, and also market conditions that I've learned from real estate market conditions, business cycles, credit cycles, all that stuff. And we still have a coupon code, LEAP, if you want to join, 50% off the first month and a bigger discount on the yearly. The crude oil breaking out. Is oil ready for the bull run? Yes, it is. It is. And we could be entering, in Elliott wave speak, the third wave. So if you were to back out, this is wave one. This is your pullback here, known as wave two, and we could be entering wave three. That is a possibility. Now, I'm not an Elliott wave expert, but I will say that it kind of looks like that. And maybe we get a big run up here. It could also be if we could get a double top. It could be a Batman pattern where we come back down one last time, say 2024, 2025. That is also another possibility, and that we bottom here somewhere over in the future in 2025 or something. And then we have the big wave three. That is also a possibility. I'm not stating that I know the future. I'm not a genie in the bottle, but that could happen. And we'll continue to monitor the charts and see what plays out this summer and after this summer. A lot of it does deal with the physical tightness in the markets and what shale does and Saudi Arabia. Coming on down, we've got, if there ever was an ideal time to join us at North Star Bad Charts, that time is now as silver's breaking to the upside. I would say that you guys are a little late because we've been buying the bottom here in a lot of these small companies that are up 20 something percent in some of them today alone. Off the bottom, a lot of these companies are up 70, 80% if you bought at the bottom of the wedges that historically that's where I buy. And if you're part of the website, you guys already know that. So coming on down, U.S. petroleum inventories, crude, SPR, refined products in millions of barrels continuing to decline. Now, there's something on this chart I want everyone to notice. In 2000, 2002, 2004, 2006, 2008, we were in a petroleum inventory increase during that last bull market. We were increasing barrels. To me, and in all honesty, guys, I know I want to make money from all this, and that's all cool and well, but this kind of scares me. It scares me because I'm seeing the world's inventories drop. We still have pretty cheap oil prices, but I don't see a huge response in production. And I know a lot of people think that Saudi Arabia is controlling the oil price, and to some extent they are. But here's the question I have for all of you guys. What is a good inventory level to buffer the world? And what is enough spare capacity to buffer the world? Saudi Arabia is keeping buffer capacity. If we're at the whim of if we're at full pumping capacity and our inventories are dropping like this, we're going to get an oil spike and it could be dramatic. So I'm in the camp, I'm looking at the shale production and I'm like, we'll see if it can increase. I don't know if it can or can't. I think a lot of the tier one wells have basically been used. We are starting to hit up some of these lower tier wells that the productivity might be a little bit lower. Yes, they can make it up on volume, but I don't see the drilling taking place for that to occur. I'm seeing companies slow down on drilling to some extent. They're buying back shares, returning to shareholders, which is great. But that's not going to help our situation. Inventory is going to get to a dire levels. Our production may decline, and that's when we'll see where oil price becomes a demand destruction price. Right now, if you were to compare oil in relationship to gold, it is very cheap, very cheap. And I haven't ran it here recently. It was in the upper 20s when I last looked, 28 or something like that, 26, 28. And gold's been shooting higher, so I have a feeling that oil's probably going to start to shoot higher too. And that's also in alignment with this breakout that we've got going on up here. So we have a really interesting setup going on here with inventories and production. Gold Ventures says, as much as I love gold stocks, silver stocks need to outperform for a healthy precious metals bull market. And they are breaking out today. I own both the gold and silver juniors, and you can see the inverted head and shoulders and the big breakout on the right-hand side here. For SILJ outperforming GDX. And the junior silver companies, I think, are probably the sector that's the most undervalued it has ever been. That also means that that could be the greatest potential in the market because silver is breaking to the upside, and I'll show you guys some charts of that. If you want to know what these specific silver junior companies are, I went over a bunch of them in the midweek update that I just released in some of my favorite silver junior companies. What I do is I look at some of the actual genetics. I call it the genetics, the fractals in these charts. And basically, we do fib extensions and all this stuff. It's based off Fibonacci sequences, and Fibonacci sequences can work on your hand. It works on the genetics of humans. It's in everything, trees and all sorts of stuff. Um, that's what I'm using to identify what I think are the biggest winners in the silver junior space. And a lot of us have already purchased those companies. And I was sharing those during the midweek update. FTX monthly, this is a copper company, Freeport McMoran. It is up against resistance, ready to break out. Generally, when you break these large areas like this, energy is also breaking out too, XLE and a lot of these. That generally lends itself to a monster run. Right now is probably the most important time as an investor to get educated in commodities right now. If you're not, you need help immediately, in my opinion, because when you break these things, that's where your returns are going to come from. This is a three hump consolidation, one hump, two hump, three hump. I bought in the corner here. I've been buying up in these like pullback zones up here too, not in Freeport, but in our more leveraged companies. And when you break these areas, guys, you're going to see a run that you probably have never experienced in your life if you're a retail investor. It is important to seek guidance by not just me or just anyone at this level, in my opinion, because there's a big opportunity ahead of us to make money. Here's copper again. This is his downward trendline break and the potential targets that he's got on copper. And I know some people are trying to play copper, but silver, I think, is the one to play. But copper, 420, 440, 465, 570, 610 is what he's got for projected targets based off of Fibonacci sequences and maybe even projected moves. You can see he's got Elliott wave counts on here as well. Peter Schiff says gold and silver and oil have all been on a tear lately, so is copper, despite the US dollar holding up well against other fiat currencies. Today, the dollar index is down over about a 0.5%. If today is the long overdue beginning of the major dollar decline, expect commodity price gains to accelerate. So, what generally occurs this first wave here is under an increasing. So, basically, this moves up. They increase interest rates, they increase all this stuff. The dollar goes up and they go sideways into a wave two consolidation. The next leg generally occurs when they lower interest rates and the dollar gets weak. And we see a run across the board of gold, silver, and all the other commodities. That I think is coming. That occurred last time from 0102 was that general area and everything ran together. I think that's coming here and it's going to be a very big move. Christine says from 2011 to 2014, the oil range traded between $90 and $110 a barrel. It's in that red box there. In inflation adjusted dollars, oil should be range trading between 124 and 150 a barrel. $80 a barrel in 2011 is 120 a barrel today. If you don't see oil as cheap here, you have recency bias caused by shale oversupply and global price war. Then the COVID crash from 2015 to 2021. She is correct, but the only thing I'll say is in my opinion, we are earlier than what even she thinks. And the reason I say that is this was after the crash. This was an '08 commodity bull market crash, and then we went after it. We are way before that. We are like in 2000, 2001. There's a fractal that is the same fractal as this. And this projects the move to entirely new heights completely off this chart. And that is where I think people struggle is they continue to have recency bias, exactly like she has stated there, but they can't see the big picture move. Now, I can't tell you if we're just going to go straight there or if we've got one last down cycle before that moves on up. I don't think anyone can tell you that with any sort of certainty. But to me, I think multi-$100 oil by the end of the bull market is most likely going to be the case. And where people get it wrong the most, they ask the question, how can people afford oil if oil is $300, $400, $500 a barrel or greater? What I'm going to say is you guys are thinking about it in the wrong perspective if you ask that question. The question is, how does oil get to $300, $400, $500 a barrel? And what my answer is, it's not oil, which is the numerator. It's the denominator, which is the dollar going down. And that is where it's going to come from. It's going to be a debasement of the currency that's going to drive oil to those prices. It's not the numerator of supply and demand. Supply and demand, the demand will come from credit creation. And the credit creation is going to destroy the dollar value. That is the demand. It's not the way that most people think about the world. They think about the world with the numerator. They don't think about the world with the denominator, which is the denominator is the dollar price. That is your measuring stick that's going to get wrecked. And that's why gold is going up so much. The crude oil weekly breakout is now underway. Oh yeah, looks like we got another one there. And the other high was $95. We'll probably break through that if we're in wave three. Christopher Aaron says silver has broken a primary multi-year downtrend. Note, there have been 4 other such signals in the previous 20 years. The average result is over 102% in 8 months. $50 an ounce silver by December of 2024 is his projection. If we do get something like that, where we get $50 an ounce silver, that also activates the larger up and handle pattern, the big one. And we could see a pause maybe at 50 or so, or maybe slightly before that, and then another launch higher. Again, this is all driven by the denominator, the value of the dollar. If we get a $50 an ounce price, some of these silver junior companies could be like to the moon if we get there, which I think we will. JSG says bullish total commercial petroleum stock draw for April 3rd, 2024. WTI fair value price of $85 So WTI is currently fairly valued. Even flat stocks in quarter two is bullish as the quarter historically builds. So we have a bullish second quarter. This is generally where we're building, and we saw that inventory level dropping on an earlier picture. As inventories drop, this fair value is going to work its way upward and to the left if commercial inventory stocks drop. So as we drop, we'll move left and become undervalued if the price doesn't go up. And if we have to go up in price to stay in the fair value dot plot valuation, he's got an R squared value, which is basically, it's got an 84% confidence level that will be inside roughly this general area. If we fall out of it, like maybe we've cycled through this way, that means you're undervalued. You want to be buying oil in this general area because the supply and the inventory level is lower than historically it's been priced. We can also see that quite dramatically in a ratio chart when you price gold and oil together. Grady says, been saying this for 13 weeks that gold has a quarterly breakout. Now also silver has a quarterly breakout. And the combined gold and silver vehicle CEF is also breaking out, means that the secular bull market is resuming. A proper lifetime opportunity and a threat. Do get ready. What does he mean by that? It's an opportunity if those who participate in this, because you can grow your purchasing power if you're in these certain sectors. The problem is if you're not in these sectors, you are going to get decimated because it's a threat to the purchasing power of that denominator, the dollar. You have to be inflation protected assets because the dollar is going to get wrecked here. And that's why we have to get ready for it. Silver at 50 journey, we can see this is silver versus the S&P 500. We're at a very low level. The charts that I run, they look a little bit different. It's a double bottom and it's ready to rip to the upside. Peter Schiff says the oil price is now above 86, its highest price since October of 2023. The price is now up 20% on the year, which is only a quarter over. Given that the oil price was down 10% in 2023 and the consumer price index still rose 4.1%, imagine how much larger the 2024 consumer price index gain will be with oil prices soaring. It's going to be inflationary because the first thing you're going to see is you're going to see producer price indexes go up and your PPI to CPI ratio is going to rocket higher, indicating that inflation is going to work its way back through the system. He is completely right. Here is silver, pent-up energy being released for a breathtaking run. Here's your popping higher here and your projected move in SLV. We're at $26 and something cents here. 43, 138, 300, and $666 an ounce. And that's where people, I think, do not understand what the potential that is coming could occur. The physical metal, least risk way to play it, and obviously you've got some other ways to play it as well with junior silver mining companies or producers or whatever you want to put, whatever flavor you guys like in the portfolio. We've got freight futures. We had a big move in dry bulk today, up 8% and 3% for Capesize and Panamax, and the tankers are still flat, even though I am seeing some of the tankers that I like breaking out of stage one bases going into stage two, which look fantastic with 8 and 9% dividend yields. I love it, guys. I love it. Patrick Karam, silver's coiled tight above its 36-month moving average, enabling it to explode in price much higher before crumbling down. If it was to reach the previous peaks of FOMO, then greedy 40 bucks and $62 targets are on the table. And there's that break for silver. We are getting above the large volume, I'll call it node, where there's a lot of buyers and sellers that have traded. Once you get above that, you have lots less resistance to move higher. And you could see a monster move and breakout from that. JC says falling interest rates, the 10-year yield and the 30-year yield continuing to work higher and they are the highest levels since November. Are we going to see higher interest rates? Do we have a bond crisis? Maybe. Maybe we do. Grady, silver breaking out, SLV. You can see the clear breakout there, looking fantastic. We've got Warren Pye says, I still think we get a cut in June. Disinflation is still on schedule over the next few months. Oil rally about done, in his opinion, right when all the generalists and permeables get loud. And remember, oil is the main driver of market-based inflation measures. So he's taken a different stance on it, potentially. And here's your 1-year CPI swap rates follow oil. You can see a little bit of a decline there, but I don't know. I'm going to remain open-minded. I'm not trying to trade the short term. If he's right, he's right. If he's not, then he's not. But that's what I see for today, guys. That's all I've got. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you haven't already. We do have that discount leap still going on if you want to try it out, 50% off the first month. And we've got a yearly bigger discount. If you enjoy the service and you're on a monthly membership, you can switch to the yearly, take advantage of that LEAP coupon code, and save yourself a little bit of money if you'd like. But that's up to you. Do whatever you want. And we have a 5 p.m. question and answer session coming up on Sunday. And we'll see you guys later. This is Finding Value.